Sunday, June 28th, 2020, Maneco 64, home of alternative economics and contrarian views. Today I'm going to talk about how the 21st century gold bull market is far from over. Of course, silver will be included in the analysis as well. I made a similar video back on June 22nd, 2019. So this is like a part 2. And before I start into the analysis, I like to say that the most important thing, in my opinion, and this is what I've experienced in investing or saving in precious metals, in stacking since 2002. Yes, it's frustrating looking at the day-to-day moves sometimes of the price of gold, all the shenanigans that go on. But I would say patience is the most important thing, because in the long term, under the current monetary system we have, under the current irresponsible actions of central bankers and politicians, gold will continue to be a safe haven. It will continue to be a way to protect one's savings from currency debasement that back in 2019 was still going on. We still had zero rates or very close to zero rates. We still had QE from the ECB, and there was no way the central banks were going back to anything normal. And since then, of course, we know it's all gone out the window in terms of normalizing to a more sane monetary policy. So it's far from over. Today, I will look, of course, a lot at the technicals, but I will go over the fundamentals a little bit about the gold bull market in the 21st century. Yes, it's been a year since I made the first video, and yes, it's far from over. Let's go through this 21st century precious metals bull market. So yeah, it's gold and silver. I will be looking at the technical picture for the gold price in the US dollar, the British pound, and also the US dollar price of silver. To try and forecast time and prices in the future, I will be looking at the previous bull market in the precious metals back in the 1970s. Technical analysis is not an exact science, of course, but I think it will help us have an idea of where gold and silver are headed. I don't think we're going to get like an overnight reset in the price of gold and silver, like they'll come on a Sunday and announce it like they did in 1971 when Nixon closed the gold windows, for example. And why do I say that? Well, because I think gold and silver right now, they're not monetized. They're not in the system, in the monetary system. So they'll do it through the market. One point I would have to make, though, on the fundamentals behind the bull market in precious metals is that it means we will have a bear market in all the national currencies. And that is surely not a positive for society in general or as a whole. It will mean lower standard of living for the general public, especially in the Western world. United States especially, I think, will be hit hard. Well, relatively hard compared to other countries. Less economic prosperity, more social unrest, etc. What we need to understand is that a bear market in fiat currencies versus gold and silver means that the purchasing power of the national currencies are decreasing in two of the best monetary stores of value for the last 3,500 years or so. I have been warning about this fiat currency debasement for over 10 years. As you can see here, some of you know this article already. I wrote back in 2007, and I warned family and friends even before that when I started looking into the monetary system. So there you go. This was back in 2007 when I talked about currencies. They're all sinking, right? and they're continuing to do so. Of course, I'm not the only one warning people about this. There are many other analysts or observers like me who have been warning those who will listen. The analysts at Incrementum, like Ronald Peter Stofferle, is one of them, and he has compiled a statistical proof of how the 21st century gold bull market is not just a US dollar phenomenon. So you can see here that gold has gone up since 2001, on average 10.3% in all these major currencies. So this is an interesting part here. I'm going to go back to the 1970s, look at the bull market in the 70s and each phase, and try to extrapolate to the current bull market in gold. And I'm going to do that for silver and also for gold in British pounds. So the first phase, so to speak, in the 70s was roughly from around 1970 to 1974. Gold was at $35, of course, in 1970. And then in 1974, it topped just below 200 at 195.50, a gain of 458.7%. Then we had a correction phase from 1974 until 1976. Gold corrected from 195.50, and then it bottomed at 102.20. So it was a correction of 47.7%. And then we had the wild phase, the third phase. It's always the one that's more exciting, stronger of all the phases, I would say. So it started in 76, of course, with the bottom in gold at 102.20, and then it topped in January of 1980 at roughly around 850. Some people note that it actually traded a little higher, but for the sake of this analysis, I'll take 850 because that's what the chart is giving me as well. So as you can see, it was a gain of 713.7%, or 1.56 times the first phase's gain. So let's look at the 21st century gold bull market. So now let's look at the 21st century bull market. One point about this analysis is that I'm basing my forecast on the premise that the bull market is not over yet. I would say that a sustained break of the 2011 high in the US dollar price of gold at 1920.18 will confirm that we are in a third phase. So this is a forecast. It's not a certainty. As I have noted many times, nothing in markets or life for that matter is certain, but I would say that seeing that we are in a fiat currency bear market and all major currencies have made new lows versus gold in 2020, I think there's a very high probability that the US dollar will do the same in the near future. So 21st century forecast using some of the 1970s data. If one looks at the 1970s cycle, one will see that the first phase lasted roughly 4 years, the corrective phase roughly 2 years, and the final or third phase 4 years. So in the 21st century bull market, the first phase actually started in 1999 and ended in 2011, so it took roughly 12 years. The corrective phase lasted 4 years, 2011 to 2015, so I'm going for a final and third phase of 12 years, as it looks like the current bull market is much more of a longer term affair than in the 1970s. I have also forecasted that the dollar index could bottom around 2024 or 2025, as I think we are in a 7 to 9 year downward cycle from the January 2017 top. So gold topping in 2027 might not fit in to the dollar picture. If you look at this chart though, note how the dollar index actually bottomed in 1978, or around 18 months before gold topped in January of 1980. So now to the numbers for the 21st century gold bull market. So the first phase, as I said, 1999, the bottom was at $252. 2011, gold topped at 1920.18, a gain of 661.9%. Correction phase, of course, 2011 top to the bottom in 2015 at 1,046.27, a correction of 45.5%. So pretty similar correction to the 70s bull market. So here's the third phase. Of course, there's a question mark, as you can see here, for 2027. For the top, of course, I think the third phase will start very soon, or will confirm itself for that matter. So the bottom in 2015, why 11,843.77? Well, because it's a gain of 1,032%, or 1.56 times the first phase's gain. And as I said earlier, in the 1970s, the third phase was 1.56 times greater than the first phase. Of course, it could be less in this 21st century gold bull market, or it could be even more. But I'm going to use the 1970s proportion, 1.56. So there you go. Gold almost at 12,000. So is that an outrageous prediction? I don't think so, actually, because if you look back in the 1970s, who would have thought back in 1970 that gold would be almost at 900 by the end of the decade? It was a 24 times move in the price of gold. So if we go to 12,000 roughly by 2027, it will have been a 48 times move. But don't forget, this is a much longer bull market. It started in 1999. So it's like almost a 30-year bull market instead of a 10 to 12-year bull market like in the late 60s, 1970s in gold. So I don't think it's an outrageous forecast. And I think we've had a lot more inflation in terms of debt creation and funny money or fiat currency creation. Of course, back in the 70s, we had, of course, the inflation under a gold exchange system during the Bretton Woods system. So it was more controlled. The inflation wasn't as bad. So the inflation now since 1999 has been a lot worse, even though, of course, we're told by the powers that be, by economists, central bankers, that we don't have any inflation. But if anyone out there who's middle-aged, who's been around for a while, can honestly tell me that everything they need to survive has been going down in the last 20 years, I want to hear from you. So here we go. This is the chart of gold going all the way back to 1970 when gold is at $35 an ounce. And I did a logarithmic scale chart because it shows you how it's not out of the realms of possibility that we can see a 5-figure gold price. So there you go. We've got the first phase in the 70s there, the corrective or phase 2, and then the third phase, and then the beginning of the 21st century gold bull market, which was actually in 1999, the first phase, the corrective or correction phase 2. And you can see that the third phase, I still got a question mark. But I would say I've looked at some analysis over this weekend. Someone wrote to King World News and said, if we close this current quarter, which is going to be on Tuesday, of course, which will be the 30th of June, if we close above 1772 in gold, that will be the highest quarterly close ever for gold, because in 2011, gold did go to 1920, but it never closed the quarter at that level. So there you go. So now I want to look at XAU GBP, or gold in British pounds, in the 1970s bull market. Of course, I am in the UK. A lot of my viewers are in the UK. Of course, a lot of my viewers are in the US as well. So the first phase, I'm taking it from 1968 The price of gold, believe it or not, was at £14.49 pence. That's per ounce, not sovereign. In 1974, gold tops at 76.91, a gain of 430.7%. The correction or the corrective phase was in the same year there, 1974. And we had a correction of just 28.3% in British pounds. The third phase started in 74 and ended in 1980. You can see there gold topped at 367.75 for a gain of 567.8%, or 1.32 times the first phase's gain. So here's the chart of that gold bull market in the 70s in British pounds. And this is courtesy, of course, of the LBMA. That's the only chart of XAU GBP going back that far that I could find. There you go. Yeah, gold did go back up in 1982 or thereabouts, but it never went back to the all-time high in 1980. So XAU GBP or golden British pounds in the 21st century. So first phase, 1999, like the US dollar, 157.03 per ounce. And then in 2011, gold tops at 1177.12, a gain of almost 650%. That was LBMA fixing. I think we did get a little higher towards 1195. But I'm going to use the LBMA data here for now. The correction phase or phase 2, same as in dollars, of course, in terms of time frame, 2011 to 2015. 2015 gold bottoms just below 700 pounds, 694.19, a correction of 41.02%. So now we come to the third phase. So what am I seeing in terms of forecast? Well, I'm forecasting, as you can see here, gold possibly tops at 6,646.66, a gain of 857.47%, or 1.32 times the first phase's gain. And how did I come to that number? Well, in the 1970s, the third phase's gain was 1.32 times greater than the first phase. Again, as with the dollar forecast, it could be different. It could be more than 1.32. It could be a little less, but I'm taking the 1970s because it's happened before, and history, as we know, tends to not repeat itself exactly, but rhyme. So here's a long-term XAU GBP chart and a more recent logarithmic scale chart since 2006. So on the left-hand side there, I've got the LBMA chart from 1968 until now. As you can see, we're comfortably above 1400. The 2006 one, logarithmic scale, and the reason I've done that is to show you how it's not out of the realms of possibility that we could see a gold price around 6,000. If the price of gold in pounds tops below 7,000 and the US dollar is at 12,000 almost, it means that the pound is actually held up relatively well versus the dollar. That's a different story. That's the fiat currency relationship. Who knows? This might be telling us that the dollar will have quite a bear market versus the other fiat currencies. And again, this is not exact. Maybe the pound will remain weak and we'll see the price of gold in pounds even higher than the 6,600 or so that I noted. So the important thing to note about the gold bull market in British pounds is that we're already in phase 3, as we have seen it break above the 2011 high. So now let's look at silver. I haven't forgotten silver. We're going to look at silver back in the 1970s. First phase, 1971, $1.288 price of silver. It tops at $6.70. In 1974, a gain of 420%. The correction phase, 43%, 670 to 3.815. And the third phase, 76 to 1980, silver tops around 50 or 48 to be exact. That's the number I have on the chart. So it's a gain of 1158 or 1,158%, or 2.7 times the first phase's gain. So that's the 1970s silver bull market. So silver's 21st century bull market. The interesting thing about silver's bull market is that most people, and me included as well, have looked at it as starting around 2001. But looking at the post 1980 low on the chart, it comes in at 346 in 1991. I'd never thought about it like this. So the first phase or leg of the bull market lasted 20 years as silver topped in 2011. So what I'm saying here is that the first leg or first phase of the silver bull market in the 21st century, yeah, I know it started in the 90s, but I think it's going to culminate in the 21st century. So it was a 20-year first leg. And that's why I think the correction phase in silver has taken longer and actually looks like it bottomed earlier this year in March at 1170. We all remember that day when silver really crashed, as all the other markets were crashing as well. I do think, though, that silver's third phase will not be as long as its first phase, which lasted 20 years, but it will be around 7 years, as historically silver and gold top at the same time. So let's look at the numbers for silver. First phase, as I said, 1991 to 2011. A gain of 1,338%, 346 to 49.752. We almost got to 50 in 2011. Correction phase, 49.752 in 2011 to the low this year at 1170. That's 76.48%. So where do I see the third phase? Well, 2020 to 2027. Still a question mark, of course. We still have a long way to go to confirm that. We need to break basically 50, but I think silver can catch up very quickly, as we know in precious metals bull market. So I see silver topping at 442.20. For a lot of silver bugs, especially Billy, it might sound a little disappointing that I'm not saying $1,000 silver. But I'm just looking at the 70s bull market and extrapolating it. Of course, it could be a lot higher, but who knows? This is what it's giving me. I'm just looking at the numbers. So that would be a gain of almost 4,000%, as you can see there, 3,679.5. And I've used a proportion from the 70s, 2.7 times the first phase's gain. So that's how I came to this 442 number, or almost 450. And in 1980, the gold-silver ratio, or GSR, bottomed roughly around 1770. So gold was at 850 and silver topped at 48. Not too sure they did that on the same day, but let's say they did. That's a gold-silver ratio there of 1770. So in 2027, that GSR could bottom around 26.78, which is the gold price at almost 12,000 versus silver at almost 450. So that's silver's 21st century bull market. And here's the logarithmic scale silver price chart going back all the way to 1970. And you can see here the phase 1 in 1970, the correction, phase 3, the bottom there in 1991. If you don't believe me, that is the bottom in silver. It wasn't in 2001, as you can see there. So actually, if you bought silver in 1991, you bought the bottom after the 1980 top. So phase 1, as you can see, 20 years. And the correction phase, I think, is over. In the short term here, I think if we break above 21, that's why 21 is so important. And once we get above 21, I think we're off to the races in silver as well. So there you go. The 21st century bull market in gold is far from over, and in silver as well, of course. But as I said, patience is one of the most important things, not only in precious metals bull markets, but also in any kind of endeavor, I would say, in life. You need patience, and you need hard work, perseverance. And yes, it's frustrating. It has been frustrating for me at times, only because I worked in the city and I was watching the markets all the time, and I still do. But yeah, stay the course. Don't jump off the bull. It's not over yet. So if you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. And you can also follow me on Twitter, Facebook, Parlay, and all these other platforms below here. I wish you all a great Sunday. Take care. Bye.